Margin debt at the New York Stock Exchange, 1.13 trillion in September, new record, 20% above the 2021 peak. Big jumps in margin debt, they align pretty well with S&P tops. We'd say margin debt, it's a pretty good proxy for sentiment, right? It's just investors' willingness to use leverage to multiply their gains. There are lots of other interesting ways to measure this sentiment. Take a look at this one. Percentage of equity ETFs using leverage just jumped to 33%, 3 times the peak in 2022, which itself was extreme for the time. Then we have the absolute number of leveraged equity ETFs, over 700 in October, exponential growth here, 40 billion in assets now. And Wall Street wants even more. They're racing to offer investors even more risk. This gambling mentality, it's nothing new, but it does arise at specific points in the Elliott Wave structure. The bears have pretty much thrown in the towel at this point. Latest advisors survey, Investors Intelligence. Bears down to 13.5%, lowest reading in almost 7 years. That scale on the bottom, it's inverted so we can see the contrary signals. Bearish advisors, they multiply near major lows in stocks, quite the opposite of what we would hope. The extremes that have signaled bottoms in the past 5 years have been 35, 45%. We saw 35% bears at the most recent low. So that's the range. Today, we're less than half that percentage, less than a third the percentages from 2022 or 2020. So the bears, they've disappeared. These readings are compatible now with a wave structure that's deep into its final stages. Let's have a look at gold's wave structure since December 2015. We're calling that low primary wave 2, and we've got 3 of 5 intermediate degree waves done at last month's high. Wave 5 of 3 poked above that upper channel boundary, quickly re-entered. So that's a good indication of a throwover. Throwovers, they signal exhaustion. This one points to a significant pullback, but can we confirm this wave structure with sentiment? Answer is yes. We should see very optimistic sentiment at this point. We are indeed seeing it. Market Veins bullish consensus. This tracks analysts' buy and sell recommendations. We hit 95 on October 16, 95 again on October 20. That matches the highest reading in the history of this indicator, which goes back 37 years. There was only one other reading of 95. It was March 308. That was 10 trading days before gold topped and fell 34%. Bottom line, we have excellent alignment between what the Elliott waves are telling us and what sentiment is telling us. What does the market for stock options tell us about sentiment? Here we've got the options speculation index. This one's from Sentiment Trader. It's trying to get a read on investors' bias based on opening transactions. It sounds complicated. It's not. Buying calls or selling puts to open would signal a bullish bias. The opposite signals a bearish bias. October 10 reading was 1.54. That's the highest for this index since November 19, 2021. So that was the same week that the NASDAQ topped. Classic contrary sentiment indicator. And we have that same lopsided sentiment again, confirmed this time by call buying overall. Buying calls are bullish bets, large trader call buying most extreme since that same week in 2021. Same thing for small trader call buying. So this is a lot of call activity overall, and the bias is heavily bullish. Again, contrary indicator. If you want to see how we put this sentiment into context with the Elliott Wave structure, go to elliottwave.com.